All right. Good morning, good afternoon, good evening. What a shit show. Holy, everything that could happen has happened, but we are at resistance, some important resistance, and we don't want to, give up on a good thing. So, taking a step back, some of you that were trading yesterday that went into the yesterday Asian session with trades have probably lost by now. All right. So as of this morning's news events, most of you probably took losses on yesterday's position that we built, which survived the Asian session, survived the European session, right up until first thing in the morning when North America came online and everything got triggered. Personally, I had my first stop loss from yesterday's work at this purple line there. And so when I saw what had happened in the course of the night, I set up a hedge trade, which is that first trade that you see there. And then I was edged pretty much all morning. I closed the hedge where you see those little red arrows up here. And as we speak, I've basically doubled up on my risk. So what was a 4% day yesterday has turned into an 8% day today. Right. So I'm risking, I have 8% at work right now. And during this event right here, this most recent news event, I've added to my shorts. So I've built an even bigger position to the tune of about 8% or so. And my break even is right here. And so my break even is currently 3 boxes away. Right. And that's doable. And that would free up all of yesterday and make me a little bit of money with today. Right. So I was hedged pretty much for the last 2 hours. I closed the hedge just a little while ago. And now I'm willing to trade towards this. I suspect we've already reached the average daily range. Right. So I doubt it's a probability. I doubt there's further upside. And the pullback is likely what I'll be making my exit on, not on a further upside. We have to remember, right? The priority of this whole strategy is not to catch the trend. We're not trend traders. I couldn't care less if it's a green candle or a freaking purple leprechaun. What I care about is the range that it's stuck within. And as long as we don't make a higher high, I am bearish. Right. And so I have to survive. Yesterday I was bearish. Today I'm bearish. Right now I'm bearish because we're not making higher highs and we don't want to get caught with our pants down. Right. A lot of people right now are seeing only the lower time frames. They're only looking at the moment right here and they're falling into this trap. Right. The trap may be valid right up until the very last pip. Right. So I don't want to be participating in the bullish side of things until I must. And in that approach, I have to break out of that range. Right. So if we follow our normal processes, we would start by looking at the calendar, which today was just full of stuff. Right. So it started to Thursday right here. Right. So jobless claims all the way down to right around here. And now we're waiting for the rest, right? We do have further bill auctions. These may actually move the market, right? So they have in the past, in the last few weeks, the last few months. So we have to be careful. We have to be on the lookout. There's more US news. And then tomorrow, there's even more US news, right? So the service industry, being what supports the US economy, we don't want to fight that. We don't want to fight the service economy. And so we have to see the numbers come out. And from what's come out this morning, it looks as though that service economy may be starting to slip a little. Right. So employment and unemployment and that kind of stuff. Right. So this was a result of inflation, sticky inflation. And here we are paying the price. And let's see what happens next. Right. So I've built a short position now over the course of 2 days. I'm in about 8% of risk on the account. I was hedged this morning, and I will reopen a further hedge if I must. Right. But for the time being, I just want to close what's there. Right. My whole purpose is to target this. Okay. So it's all about getting out while minimizing the losses. And as such, we're trying to get out at break even or as close to break even as possible. And we're trading like an insurance company. I'm sure you've noticed we're spending money in order to reduce the overall loss. Right. So if I can get to break even, my overall loss is zero. And it's cost me time and effort instead. And so it's this risk assessment, right? My assessment is that as long as we don't make a higher high, I must stay on the short side. Okay. And that will be the key, right? Everything will fall apart. This whole 3 days of work will fall apart if we make a higher high. Okay, so that's the premise that I'm working with right here. I'll take one sell, right, with a 3 pip target. Let's see, I'm just looking around at some of my other accounts. Got stuff running everywhere. I'm in the same hot water in all of my other accounts. And so if you're using traditional pivots, if you're looking at traditional pivots ever, you'll notice right here, this is daily R3. So as far as traditional pivots are concerned, we are at resistance for today, and that would be an excellent place to be selling, right? Just mathematically speaking, where the average daily range is and where we are within it, we're on the upper end. We're exceeding the average. Time of day calls for a pullback, right? This is why I show up at this time every day, for this pullback. Right. So I actually started earlier so that I can protect this whole position that I built myself into yesterday. Right. So hedging is a tool in the toolbox. It's a tool we don't like using, and most people use it at the worst possible time, in case of duress. Oh shit, I got a hedge. What we try to do is envision that next move, and we're ready for the hedge when we're substituting the stop losses with the hedge, and then we have a plan B, plan C, plan D. In order to learn to hedge, you have to learn to lose in one direction first. And then losing in two directions becomes a little bit easier. Right? It's a progressive education. You have to learn how to lose before you learn to lose in both directions at once. Right. So we're testing the upper range. We're testing all of that resistance. If we go further left, nice little zone here. Right. Nice little zone here. A lot of stuff can happen in this area. Right. And it's the range that we work within. Right. So let's go down to a 1 hour chart. Right. Now we have our floor. We have our ceiling in the vicinity. Right. We have our ceiling. We have our floor. And and we are range traders, right? We're not trend traders. What do we do here? Right? We would sell that. And so we've been selling this. And some of you actually probably booked losses right around here because we were selling yesterday. I ended up going hedged at 52 right there. This is where my hedge kicked in. That's from my work from yesterday, right? So this upper half, I've been at risk of being, wrong, and yet still trading the short side with the hedge as a backup, as a support. The tool, the hedging, still has to be dealt with. All right. All I'm doing with the hedge is postponing closing these losers, right? These losers down here, right? I'm just postponing trying to find a solution that will get me to break even instead of throwing in the towel and losing 36 pips or more on everything, right? It's this thing. I must stay and fight. I must stay and solution the problem. The solution is money. I just need to figure out how, where, and when to spend this money to create the exit that I'm looking for, right? I'm engineering the exit that I'm looking for. And if I'm wrong, eventually we do have to lose. Like we do have to throw in the towel. And that's what determining this is critical to our success, right? If we change the structure of things, we must change with it, right? So until the structure changes, until I'm, wrong on multiple time frames, I'm not wrong. I'm just in a battle. Okay, so the problem will be what happens next. I'm positioned for a down leg. Right. So on a 5-minute chart, now that we have our floor and our ceiling, you want to go and check out that ladder that we work with every single day. Oops, I want this one. Oops, come on. Right here. All right, so now we've got a couple of steps along the way. And it's just a matter of watching and having a plan to execute at each of these levels. Right? The target is not today's target. Today's goal is not to make $1 billion. It's not to make 3 pips, 3 pips, 3 pips. Today's goal is to solution an exit. Right. And so I'm waiting to see. Let's see the calendar real quick. Just double check. I'm waiting to see if there's anything coming. I think there's news 9 o'clock, 9 something. Yeah, right here. So I want to be careful around here. But other than that, I still want to be short. Okay, so to reiterate for those that came in late, yesterday we left the playing field shorting with our stops somewhere in this zone here. And then we managed to survive. This is what we did yesterday. We managed to survive the Asian session, the European session, and then in the late European session, early US session, we broke through and started to go higher as a result of news. I ended up hedged right there. And then I closed that hedge once. I re-hedged a couple of times. I ended up closing all the hedges up at the top there where that little red arrow is. And while I was hedged, I was playing the short side, short side, short side. Now here we are near the high of the day. And I want to build the wick on the daily candle. And if I'm in that wick on the daily candle, I'm also at the same time targeting this break even, which would solution 2 days of work. Right. So if the market can come back, oh, look at that, 4 boxes exactly. I don't lose anything over 2 days of work. That's a big if, right? That's a big if, but the probabilities are on our side, right? So even if it gets close to here, it's close enough. And I can book some losses and yet still come out way better off than have I done anything about the situation. Right. So it's this getting back on the horse and continuing to fight. The tools in our toolbox never changes. It's how we use those tools. Right? Hedging is the last tool we want to use. All it does is postpone the inevitable. Right? We still have to close losers. We still have to close half of the break even is a loss. The other half of the break even is a win. Postponing that loss is what hedging does. It's not a solution. It's just a bigger problem. And you need to learn how to work with a bigger problem. So learn to lose in one direction before you attempt hedging. And in general, you could be hedged for days, weeks, months, and you pay swap, you pay to hedge, right? Double trouble, double cost, double everything. Right. So now that we're moving slightly higher, I do want to drag this up with me. Right. This white line is my exit, and I want to keep it at least within 4 boxes. So I got to bring that white line up. I'm going to sell one right here. And as such, I move that up. Right. The exit remains 4 boxes away or less. I'm trying to keep it within reach. And we know an average move is 4 boxes or less. And so I'm targeting a big average move. Right? I'm targeting the full 4 boxes as my exit strategy. It's a big if, right? But I'm also risking 2 days of work, and I'm trying to engineer an exit. And ideally, because I'm looking to my left, I have reasons to believe I may still be right. Right. And then when we look at things like the dollar index or the yields, let's bring that into view. We look at that every day. Right. So here's the 4-hour chart of the dollar index. Today's move brought us back to support. Here's the yields, 10-year yields. Today's move brought us back to support. Right. This is why I'm not giving up selling the euro. Right. I still think there's a chance for a bounce here. I still think there's a chance for a bounce here. Right. So it's time that will tell if I'm mistaken or not. I've got trades going on in other places. So here we are, hopefully near the high of the day, near the bottom of the hour, right? Which is what we structure for almost daily. We did that yesterday. We did the exact same thing yesterday, right here. If I can get there. Where was it? Right here. Right. So we did the same thing. We positioned ourselves right at that same time of day to exploit a move, which ended up running us over. Right. So we exploit the market under the same circumstances today, and we're expecting a different outcome. Same but different. Same situation and expecting a higher probability outcome. Right. time of day, positioning, sizing, all of these pieces we try to keep constant. And then we remain the last variable. Ultimately, if you trade in your own account, like what we're doing here, you have control. You have more control than if you're trading somebody else's money in a prop firm and you're stuck with obeying the rules. Here you can use discretion, not disobey the rules, but you can make them fit the situation. That's what we want to see. Stuff like this. Right? We're testing the extremes, and situationally, it's because I'm here on schedule. Hedging is not something I aim to do. It's something that once in a while, I'm just recycling those trades that close. I want to keep bringing that white line back up. So yeah, hedging is just one of those things that once in a while you are prompted to bring out of the toolbox. It's like using a butter knife to take off a flathead screw. Right? It really doesn't help. It it just buys you time a little bit, makes you look like you're doing something. Yeah, essentially, losing is usually a good alternative. So yeah, learn to lose, and then you'll eventually grow into hedging. Right? And even that may not be your cup of tea. It's not for me. It really not. It's not something I enjoy doing. It stresses me out. And for a lot of you guys that live in the States, you're not even able to do this. Right? You don't have the ability to hedge by law. And so it's it becomes a problem. Hence, if you're trading futures or any kind of first in, first out, with this method here, you have to be a little bit more of a sniper when it comes to taking your trades. Like you want to sell at that resistance on that green candle and aim to be out in 1 or 2 minutes, like we try to do most times, right? Drawdown is a big problem when we're trading futures. It's an expensive problem. Right? So did we find the high of the day? Are we building a wick? Right? This the sad part is me personally, I'm very biased towards the US. And so I have a really tough time seeing negative news coming out of the US. It's hard for me to trade the US, bad luck. And so I tend to hedge in those situations because I understand overall nothing's changed. The US is still the big dog. Just today's event was a kick in the shin. Oh yeah. In the chat, someone is mentioning I'm not running my boxes. No, sorry. I see boxes. I see this range everywhere. It's like if you ask a carpenter what 1 inch looks like, they'll laugh at you. And so, but yeah, we see the same distance. I see that same distance over and over and over. I've come accustomed to assuming the box is there, even though it's not there. Yeah, so today, a bit of an eventful day. A lot went opposite to what I suspected would have happened. And yet, we're here to talk about it. And if you take losses, it's part of the game. It's normal. You know, the recovery of those losses will come to you 3 pips at a time. You don't have to make it all back in one big fat trade. Right? We want to show up every day, do our 20, 30 trades, and try to get out in that same session if you can. Yesterday was kind of strange, right? Let's go and check that out real quick because I noticed that too this morning. This red line that we were hoping to stay under, when we broke the red line, which comes from days ago, 6 days ago, when we broke that red line, the Asian session remained above the red line, and so did the European session. That was the clue that told me I needed to start hedging when I first got to my computer this morning. Right, so right around here, 5:30ish. Oh, sorry, right around here, 5:30ish. I removed the stop losses from the day before, and I substituted a hedge trade. That's that first entry that you see there on that green arrow. Sorry, on that green candle right here. Right, and that made me money to the very, very top of that candle. And then I started trading in both directions. Right? And then somewhere around here, I opened up another hedge trade, which ended up closing over there. And here we are in the stratosphere with the leaky spacesuit, right? I don't think we're going to go to the moon. And instead, I think we're coming back down to Earth. Yeah. Right? We want to be careful with this higher high up here, right? This will be the big test for us tomorrow. Right? Highly likely we're going to be hanging around this zone here, this range that we're within. If you look left, we're within a range. The range that we are within will probably be maintained until tomorrow's PPI. When tomorrow's PPI comes out, we'll have our marching orders for the next couple of days. Right? Today's news was unbecoming of the US, and sure enough, it got a lot of people, me included. I've been bearish for a while. I remain bearish, but today put a stick in my wheel. Right? It did not cause me to panic or freak out or blow up. It just forced me to implement tools that I don't like using. Right. So from here, I'm suspecting or expecting or wanting or wishing and praying for this. Right back to my break even. All right, so let's go back and check the track record just to double check stuff. All right, so today's drawdown, let's put the account in drawdown. You can see that here at the end, at the very, very end. Right, we've gone into drawdown, but because I've been continuing to book 3-pip trades while hedged, the account continues to grow. If we go down, check today. When I look at today, because it's still before midnight GMT, I have to look at yesterday. And so one trade loss, that's the hedge that I closed at the very, very, very top. Everything else has been a winner. Today we made 300 pips. And I'm floating drawdown, right? I'm floating a number of trades that are still open, targeting a lower exit, right? I'm still looking for something like this to eventually free me from this position that I'm in, right? Remember, mean reverting, right? This is not going to the moon. And if it is, it's not happening today, right? We've already done more work than we should have. And so imagine, having done a full day of work and your boss walks up and says, "Hey, do you want to do another 12 hours?" You're probably going to say, "No way." That's what's happening here, right? In the next hour and a half, the psychology will change. This whole fear of missing out will give way for, "Oh my God, what did I get myself into?" Right? The fun's only beginning, and it's barely Valentine's Day. Right. So this is that red line yesterday we were working off of from here 6 days ago. And we already detected we might be coming up here. Remember, we highlighted this yesterday. And then at the end of the day, we told ourselves, hey, we might even be visiting up here. And sure enough, that's what's happened in 24 hours. Provided we remain below this, let's change that to a clear view. As long as we remain below this, we're good to go. Yeah, see you later, Francisco. Have a good day. Thanks for chatting with us. So yeah, as long as we remain structurally sound, this is intermediate time frame, right? 1 hour chart, intraday, intermediate time frame. As long as the structure here is sound, I remain bearish, right? My daily chart is bearish, right? I'm not a trend trader, but I have to realize the facts for what they are. And I have to subject myself to the ranges that are within this trend. Right. And now I'm trading ranges upon ranges upon ranges upon ranges. And usually it's 4 boxes in either direction. Our goal is to hopefully pick the right direction up front, trade it, and therefore avoid most problems, right? By picking the wrong side. So if you pick the right side, most problems go away. It doesn't make you an instant winner, right? Picking the trend does not make you an instant winner. So we're in survival, or some people call it fix it mode, right? You can continue to make money here. Sell resistance, right? This is your own account. It's not a prop account. You have discretion. If it's a prop account, you have limits imposed upon you, just like society does with your day job. Yeah, man, this is a blast. Days like today is what makes trading fun, right? That's the exciting part. You think you're coming in to a coffee and a donut and read your newspaper, and in reality, you don't even have time for a coffee and a donut and a newspaper. Right? The house is on fire. We put out fires. It's a blast, and it's a different fire all the time. And just like last week, we saw no smoke for a whole week, and then all of a sudden, Jack came out of the box. Right? So it's an everyday puzzle, and the process gathers the puzzle pieces. The process tells you how to put the puzzle pieces together. You trade the puzzle that you see for a couple hours, do the best that you can, and you walk away. Nowhere have I mentioned the target, right? Do the best that you can. It's a game of excellence, not a game of perfection. right? If your target is 200 and you can't leave until you hit 200, you're looking for perfection. You will fail. Right? We just have to be happy with what we get. Sometimes we get 20, sometimes we get 200, and sometimes it's negative, 200 kelvins. It's a blast. I'll take one right there. Hedging is a skill. For those of you that want to learn how to hedge, well, reach out to me and stuff. We'll talk about it. I can give you some information, but it's not something you should attempt doing unless you're comfortable losing in one direction first. Then that's just an evolution, right? If you know how to lose, then hedging is the evolution of losing. And so I turned off the squawk this morning because I was so busy concentrating, trying to clear the fog from my mind. And actually, maybe I can turn it back on. It's now that all the main events are over, we're probably not gonna get bombarded by the voice. Right. So this is the piece that gives me this is the piece that gives me a confidence, right? I'm looking at this right here, especially on the yields, and I'm looking how we're reacting here. And it gives me a lot of confidence that my euro was going to have a tough time making a new high, right? It's just looking at what the facts are. We are at support, and our euro is or was at resistance, clearly, in some major resistance up here. So we're looking to profit from that, exploiting that situation. And I'm doing it with swing trades, and I'm profiting with 3 pips, 3 pips, 3 pips along the way. Ultimately, I have an end for the week. And today is just a stick in my wheels. Right? I have an end in mind. Right. We can hear the tick strike in the background. The tone of the market is picking up speed. Right. If we get back to around 750 or so, close your hedges. Right. Don't stay long, hedged long above 750. So it looks like we're building a wick on that daily candlestick, right? Wick at the top of the daily candlestick, right? The North American traders are at work. We've been at our computer now for over an hour and 10 minutes. The cash market's been open. Right? And then we're thinking about the European traders looking at closing their books, booking profits, looking to solution the end to their drawdown. They themselves are trying to go flat, right? And so they're looking at breaking even, just like we are. Right? The main event is more or less out of the way until tomorrow's PPI. And so the future, which lies in front of us, is in the hands of North America, right? And so this unwinding that you're seeing here is from the Europeans, right? They're booking profits. They're looking to go home. We are looking to, you know, provide a market for them. They want to buy, we'll sell it. They want to sell, we'll buy it. It's this time of day, this time right here, when I overlap with the European traders, I'm being handed a baton, and I choose whether I take it and run in the same direction, or maybe take it and run in the opposite direction, or like undo what they did. And the timing helps making that decision. All right, so I hope that wasn't too weird of a last couple of days, 24 hours. A lot of you guys out there probably got wrecked trying to trade the next move, right? Because the current move was bigger than expected, but it is what it is. And so that's where the skill comes in, right? Learning to adapt. The only constant we do have in this business is things never stop changing. And so I'm the most adaptable person I've ever been. And I keep getting more and more adaptable. I used to be very I'm still very disciplined, but I would say regimented in the way I thought things should happen. And now I'm much more open minded, and anything can happen. And with anything happening, the solution is ours to find. I don't want to be given a solution anymore. I want to create the solution. And that's I think the key to this whole strategy, right? We have the 4 boxes to work within. And the more you work within those 4 boxes, the more comfortable you become. Absolutely. The flexibility, Mark in the chat is just saying the staying flexible is the key. The willingness to bend and weave, bob and weave and whatever it is you need to do to stay in the game. Right? Most people rely on one trade and that one trade's exit, stop or loss. And they're emotional on that one exit because they put so much faith and effort into their work that if it fails, it's a tap on the ego, right? It's the shame of failure. It all bubbles to the surface. We are agreeable with our losses. We almost laugh at them because we know we can recoup 2, 3, 4 trades later, maybe 10 trades later. Who cares? Right? When we take a thumping, we present the other cheek. Simple as that. Right? You get bucked off the horse, you get back on the horse. Same horse. Sometimes some people will go find a different horse. Oh, I can't trade the euro. I keep losing on the euro, so I'm going to go trade the pound, only to step into a bigger pile of doo-doo. Right? So the pile of doo-doo is not the problem. The behavior is. We understand our behavior or we work at it. We try to be a better trader every day. The process doesn't change. It allows you the flexibility to become a better trader. Right? Try this, try this, try that, try this, try that within 4 boxes. Right? So theoretically, what you have to do is show up, study the past, and remember that tomorrow will be very likely the same. There's very little changes, but everything changes. It's like watching a river flow, right? You're staring and standing in the same spot, but you're staring at a different river every second. It's the same thing here. It's just a river of opportunities, and we learn to filter and keep the worthy stuff. Okay, so yesterday's plan, I hope didn't cause you too much pain. If you had the skill set, you may have been able to survive. Otherwise, you booked a few losses or booked all of your losses, so you would have had a 4% negative day. One in a million. It's once in a while. It's not one in a million. It is something you have to learn to survive. And if you show up again tomorrow and you do your average day tomorrow, you're already fixing today's problem, right? You're already making up for those losses. They don't have to come back to you all at once, right? Our losses come back to us 3 pips at a time, multiple days in a row. Right? In the end, you control the outcome. Right. So my stop loss is now, oops, sorry. We are now looking at 17 pips away, or 2 boxes. And if I spend a little bit more money, like an insurance company, or better yet, if I close some of these, right, book it, 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 book it. So now you notice I move my average lower, right? So now I'm back to 18 pips or so. Right. So what I'll do is I'm going to put that money back in the same trades that I just closed with profits. I'm recycling them for 3 pips, 3 pips, 3 pips. And I'm bringing my take profit, my break even back up. 6, 7, 8. And so now I'm just exploiting the drawdown, and I'm doing it with the same end goal, right? I want to keep this white line within arm's length, right? Within a average move, so that it can become a target on its own. I don't have to beg or pray that it gets there. It's normal for the market to move 4 boxes. Right? I just have to maneuver things, engineer things so that that white line is within these 4 boxes. And that is not cheap. That's why we pace ourselves. Right? So this is holding. Right? This is offering us some support. Going to the daily, we're at support on the dollar index. We're at support on the DXY. I don't want to fight that, right? Especially with the US, right? So looking at the big picture, the really big picture, I don't think weeks, months, Europe is in a position to lower their interest rates before the US is. The Euro USD is bearish with that approach, right? Unless that changes, so we'll see that coming through the news. Unless that changes, we have to, in the long, big picture, remain bearish to euro. All right, so it's hard to go long, even for a day or two, knowing that they can pull the rug and head in the right direction at any time. Right, so you don't want to get caught with your pants down. We trade the facts because we're limited to a couple hours per day. And in that couple hours, we are forecasting the next move that could be. And we try to be out flat. Yesterday was a low probability coming to life. Today, same thing, 2 days in a row, right? Low probability that the US misses on their numbers. And so we're surviving. And here we are, each and every day booking profits in survival mode or not. Right. So survival mode is something we operate. It's always in the back of our mind. We always have this first aid kit on the ready. hedging is the biggest band-aid in the toolbox. It's the one we don't want to use. Right? So yeah, just engineer your way out and you'll find the success you're looking for. Okay. We'll call that a day for the recording. Hopefully you guys did not blow up, and if anything, remain short. Right? Remain short unless we change the structure on the intermediate time frame. Right? So let's go to the hourly. Right? So unless we change the structure on the intermediate time frame right here, right? We have to have a close above this yellow line. Right? So if we can close the day up here, hedging will go out the window, everything will go out the window, right? That's tomorrow's news to tell, right? Tomorrow's news will tell us if we're bouncing off or coming down. All right. Until then, enjoy yourselves, stay safe, stay flexible. Apparently, we need to be in this environment, and be willing to lose. Right? Don't worry about the losses. You're going to make them back. Right? Just commit to one standard ejection seat. Right? One standard ejection seat, one exit that you know you will never, never, never cross. Right? And therefore, you then get to choose how many trades you lose at that specific number. Right? My number is 36. That's 4 standard deviations. I choose how many trades I lose at 36. I choose 1% per box. Okay, so I'm going to let you guys go. I'm going to end the recording once I get to break even. Oh, sorry, I'm going to end the recording now, but I'll post a picture of the end of the day at the beginning of the recording. All right, trade safe, everybody, and I'll see you guys tomorrow with a big fat smile. Enjoy. Bye-bye.